heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Nvidia leads benchmarks in a big week for markets as investors await economic data and a Fed Powell speech. How did Jackson Hole?
Chinese tech stocks sink overnight. The latest on why Walmart's $3.6 billion JDcom stake sale has put e-commerce companies under pressure.
And Ford pulls back further from EVs, scrapping an all-electric SUV and taking a $1.9 billion charge to shift strategies again. That's all to come. But first, let's check in on these markets. Some economic data that we are currently digesting is their revisions to the jobs data. And yes, there are more than 800,000, but not enough to really change the dynamic move of the markets right now. We're still holding on to our gains, up 0.1%. Yes, we've come off the highs, but still managing to cling on to an upcycle when it comes to the technology names. Stock 600 over in Europe also powering ahead. We're up 0.6%. Interestingly, a rebound in Chinese tech names as well. I shine a light on the Nasdaq Golden Dragon, which I know you're going to dig into some individual moves of, Ed, but yesterday under pressure, today still some individual names we're going to be shining a light on. And just talk us through what you're watching, Ed.
Yeah, I mean, overnight, a lot of pressure on Hong Kong-listed tech shares. Why? Walmart made $3.6 billion selling out of its stake in JD.com. Actually, JD confirming through the Hong Kong exchange that Walmart no longer holds a stake. We're going to hit that story hard throughout the hour with our reporters who are on it. But it's interesting to see, at least for JD.com's ADRs, the pressure. Nvidia's top of mind. Again, we're at like $129 a share, $127 a share, not far off that $135 a share record we hit in June. There is a lot of anticipation ahead of next week's earnings, August 28th after market, in whether Nvidia will get back to that record level, record high. It's led the market right in this rebound we've seen since August or the beginning of August. There's a lot of hope. Whether hope translates to confidence, who knows, Caro?
Yeah, and let's dig into one of the key stories being written on the terminal today by our own Ryan Vlastelica, joining us to really pass through what the market sentiment is around Nvidia, whether it can bring this macro-level event come August the 28th. And you talked to some key bulls out there.
Yes, good morning. Thanks for having me. So it does seem like there's growing confidence that the spending on AI, which has been really the central bull thesis behind Nvidia and really a major driver behind overall tech gains, people are pretty confident that spending is going to remain pretty consistent. There were some concerns earlier this month about how much ROI are these companies seeing out of their AI investments so far. The general thesis seems to be that even if the ROI is a little bit delayed and it doesn't start showing up in growth and improved efficiency for maybe a few more quarters or even longer than that, there's still going to be a ton of demand for these AI chips and hardware and infrastructure, and that kind of tailwind is going to continue supporting Nvidia, at least in terms of its growth.
Ryan, it's worth recounting what's happened just in the last couple of weeks. Talk me through the rally, the rebound in Nvidia shares.
Yeah, absolutely. So we did see some pretty broad-based weakness earlier in this month. Some of that was related to the yen and just something else, just other factors like that, some concerns about valuation. But we did see a pretty dramatic rebound. We also had the mega cap results that we saw out last month. All the major NVIDIA customers like Microsoft, Amazon, Alphabet, Meta, they all really kind of reiterated that they're going to continue spending on this. And I think those two things, just people looking for a dip to buy and then that sort of spending tailwind, the confluence of those two things really spurred investors to buy the dip on NVIDIA. And you've seen the stock just jump up, I think about 30% or so off that low earlier this month.
It's interesting that chip makers have been what have dictated where the Nasdaq 100 has gone. And Broadcom, many on this show call it sort of the poor man's Nvidia, and people have been buying into that name. I'm looking at Texas Instruments today, and actually here's a company that's curtailing some of its capital expenditure, which people are worrying about too much of in the hyperscalers area. What did you make of TI today?
Yeah, so they are kind of maybe pulling back on their capex. There's some optimism that that's going to lead to some improved free cash flow for them. So a little bit of a different kind of player. They're not as active in AI, certainly not to the extent that Nvidia or AMD or some of these other major players are. But it does seem like people are looking to them just as a way to improve their free cash flow, and that's why we're seeing a little bit of a lift in that stock today. And we saw that Citi upgraded the stock, kind of expecting improvement in margins, improvement in cash flow, all related to its capex comments.
Ryan, it's a great story on Nvidia, talking to so many money managers on both sides, and indeed the latest on Texas Instruments. We thank you, Ryan Plaselica. Look, let's dig more into some of the individual names and indeed the broader market with Kevin Welkush. He's the portfolio manager over at Jensen Investment Management, covering tech, AI, and chips. You are the perfect sort of person that we need to speak to when many are wondering what the return on investment of AI is. For you, is infrastructure, picks and shovels, still the good place to be allocating?
Right. When we think about it, with Jensen Investment Management, we're focused on quality investing. We're focused on the long term. We think right now, sort of the AI attention certainly is more in the short term in terms of capex spend and demand for Nvidia chips. But historically, the chip industry is very cyclical, and we're looking for sort of those platform players that can kind of continue to monetize consistently over the long term. So when we think about today, certainly the attention's on Nvidia, but we're really looking more towards the long term. So that would be the Microsofts really establishing themselves with that massive capex spend. We're also seeing it on the Alphabet side, where again that investment's building that beachhead for long-term monetization. We also like Accenture. We think Accenture, from an AI story, has sort of been really misunderstood by the market, in our opinion. When we look at Accenture right now, we think the market, which we continue to think as a long-term investor, we tend to think of it as very short-term focused, tends to focus on a little bit of slowdown in IT spend, has sort of unduly hammered the stock, in our opinion. And when we look at Accenture, they've committed to spending $3 billion to tool up for AI. They were a market leader in terms of cloud, built significant share when they did a large investment like that as well. And we would expect them as sort of a picks and shovels type company to really benefit in the long term from AI as an implementer, in that they don't only have to pick the winner, they just have to continue to be very good at implementing the tech.
Kevin, I didn't expect us to jump straight in on Accenture. I'll be honest with you. It's a pretty big week. Economic data, Powell speaks, and everyone has a lot of anxiety about Nvidia on August 28th. Which is the most important for you?
I mean, for us, when we look at Nvidia, it's interesting, but we don't own Nvidia. And when we think about the market, it's been very binary, a handful of AI-driven stocks, and really sort of missing sort of the broader value creation across the market as a whole. So in this case, we certainly acknowledge Nvidia. We'll understand how it contextually sort of can impact our portfolio. What we're really sort of keyed in on the short term is just sort of continuation of that sort of trend and migration from a long-term perspective towards AI, but also broader tech, and seeing how healthy it is in terms of growing. So that's about it. It's sort of contextually looking at the short term, but really with an eye towards the long term.
I'm really interested in that you're not in Nvidia, but you are in Alphabet, Microsoft, TSMC, the likes of Accenture, Texas Instruments, maybe less so on the AI side, but the others are AI names. Why are you not in Nvidia?
So what's interesting about our strategy, very inherent in terms of us and our sort of quest for long-term quality growth businesses, we look for companies that have high returns on capital and consistently so. So we're looking for companies that have return in excess of 15% return on equity for 10 years. So it's not an average. Every year has to hit. The 10 years is supposed to denote an all sort of market type environment of high capital returns. And Nvidia had not, up until this most recent fiscal year, qualified. And so in that case, it does qualify now. We are actually researching it. Our sense, when we look at the valuation, would be that from a fundamental standpoint, we'll probably like it. But I think from a valuation standpoint, for us, too rich to sort of enter a position.
Right now, Kevin, the Nvidia side of the equation on AI is easier to understand. The capex investment on AI infrastructure is there. If you go back to your Accenture example, I find really interesting. Where people struggle is to see the top line growth coming out the other side, those that are working on AI services and products. Do you see it?
It's early days. We've seen what's interesting is you look at the growth in terms of AI projects and spend for Accenture has been growing dramatically. And so, but relative to total revenue, it's not as large yet. And that's typically what you see in these sort of early adoptions of, newer or new technologies. You sort of see a small base, large growth. And right now, relative to the overall picture, it looks small. And I think the market, from our perspective, when we look at it, the market's so focused on short-term gains that in essence, sort of looking at the trees, and we're trying to look at the forest. And we like the trend, we like the direction. And having been invested in this company for a long time and seeing this sort of play out before in other tech trends, we're incredibly excited about the opportunities ahead for Accenture.
Kevin Wolcott, great to have some time with you. Thank you, Portfolio Manager at Jensen Investment Management. Now, we shift gears a little here because Italian divers have now been joined by an underwater robot as the search and rescue efforts resumed for a third day around the sunken yacht off Sicily, where British tech entrepreneur Mike Lynch, Morgan Stanley International Chairman Jonathan Bloomer, and 4 others are feared to have died earlier this week. The robot is capable of operating on the seabed at a depth of up to 300 meters for between 6 and 7 hours. That's as authorities continue to investigate just how the luxury yacht sank in the early hours of Monday morning. We'll keep you up to date on the latest from this tragedy. Ed.
Okay, coming up, Walmart ends its partnership with JD.com in China. Details on how Walmart's refining its strategy in that country next. This is Bloomberg Technology.
Return to JD.com and the pressure there, because Walmart actually sold out, raising about $3.6 billion by selling its stake in the Chinese e-commerce firm. But the move winds down an 8-year partnership that appears to be paying diminishing returns amid a pretty challenging landscape for Chinese tech giants. Bloomberg's Amy Orr has more of the details. A lot of pressure on the shares of JD.com for obvious reasons, but it's really sending slight shockwaves across the entire industry group. People are worried about what the signals for JD.com and its growth.
Yeah. Well, especially at a time when Chinese economy is slowing, and also it's been reflected in e-commerce. And also it really shows that U.S. companies can actually go their own way. It's not like 8 years ago when the partnership started that you really need a local partnership to really gain popularity among Chinese consumers. And now Sam's Club has actually got really good recognition among Chinese customers as well.
That's a good point, Amy. In your reporting, you give the backstory of Walmart in China, which is about 8 years of partnership with JD.com. But their kind of hypermart business is strong. Sources talk to us about that. What did you learn?
So essentially, the partnership in the past, it was great. It started off as trying to get Chinese customers to actually recognize its brands and try to gain shares that it might not have been able to without a Chinese partner. But now that kind of growth has slowed together with the Chinese economy slowing as well. And then Sam's Club essentially is the only one of the top 5 e-commerce platforms in China that recorded growth. That really shows that it can actually go alone, and it probably should go alone. And essentially the $3.6 billion that it got can actually put to better use.
Yeah, that'll help. Bloomberg's Amy Orr, who broke the story last night. Thank you. Another one that we're watching, Ford recalibrating its EV strategy again. This time, the automaker's cancelling plans for its fully electric SUV, a move that could cost the company nearly $2 billion. Bloomberg's Keith Norton is here with more. Keith, it feels just like yesterday that you and I were reporting that Ford was going to focus its EV unit separate away from everything else. And now it's a change. I think you spoke to the CEO, Jim Farley. What's the rationale here?
Well, Ed, they are trying to find profitability for that EV unit that they broke off 2 years ago when we reported on that. This year, they're expecting that unit, known as Model E, to lose as much as $5.5 billion. This 3-row SUV that they've canceled, they said that Jim Farley told me they just couldn't find a way to make it profitable. It requires a very large battery, which is high cost, and they can't put it out there with all the competition in the market requiring price cuts on EVs. So they canceled it, and they're looking at perhaps doing an extended range electric vehicle technology on that.
Yeah, Jim Farley actually saying, look, we loved our three-row crossover. He was so excited to show it to everyone, but they couldn't get it to be profitable. It feels as though, once again, hybrid is where it's at.
Yes, they're seeing a lot of growth in hybrid. And Farley, in particular, is really enthused by EREVs, this extended range electric vehicle, which is where you have a gas engine that's sole purpose is to just recharge the battery. It doesn't drive the wheels. So you're really in electric mode most of the time. He saw those over in China. He really wants to get them in the Ford lineup, and we may see it as that three-row SUV eventually.
That's something that's popular in China, and a number of the Chinese domestic manufacturers have a thought about that. I mean, what I don't understand, Keith, is whether this will ever be a place where Ford just does EVs. I thought that was the transition plan, right? Profit from pickups funds the transition long-term to EVs. Now it seems like that's not as clear-cut.
Right, it is not, Ed. And the new plan really leans on hybrids more, which Ford has been in the business of doing for a long time. In the EV space, they're looking to do smaller EVs, and they're really looking at advances in battery technology. They have LFP batteries coming out of a plant in Michigan that will power a new medium-sized pickup truck, EV pickup truck they'll have in 2027. Jim Farley told me that the total cost of ownership of that truck with those lower cost batteries will actually be cheaper than traditional vehicles.
He called this a tremendous pivot. Is this an embarrassment, Keith? Is this something that Jim's worried about investor reactions long term?
Well, so far, investors have reacted positively. The stock is up today. I guess there's a couple of ways to look at it. It's certainly embarrassing that everyone got so caught up in the hype that they started building plants and building battery factories everywhere and now have to scale back. But Ford at least has acknowledged the need to do that. They've been sort of out front saying, no, we need to change. And they've been sort of chipping away at it. And now they've done this whole plan that he says he thinks will be the final move. We'll see.
It's a big cost to have to suck up once again. Keith Norton, great reporting. We thank you so much for joining us on it. Meanwhile, coming up, abnormal security. It hopes to use artificial intelligence in transforming the cybersecurity landscape. We're going to speak with the CEO next in our AI in Action. This is Bloomberg Technology.
Time for AI in Action. And today we're looking at the rising risks of AI in cybersecurity and how one company aims to fight fire with fire in combating the threats. Joining us now is Evan Reiser, Abnormal Security's CEO. Abnormal recently hit a $5.1 billion valuation in its latest Series D fundraise. And I think that the story here is actually pretty clear, that the tools available to your industry in defense are also available to the threat actors, right? That AI has given them something to work with. And that's kind of what you're trying to combat, Evan.
That's absolutely right. You know, AI is an extremely powerful technology. Like all technology, it's a tool, and tool can be used for good or evil. Unfortunately, you know, criminals are faster at adopting new technology, and they're using new AI technologies to do more bad things.
You've got 2,400 plus customers. How are they using you? Because ultimately, you're trying to predict me, the human, and when I start to act in a strange way, right?
Yeah, in an abnormal way. So that's correct. So, you know, if you look, a decade ago, criminals were very focused on attacking infrastructure. Now they've moved on to the more vulnerable target, which is people. And we see, you know, social engineering, fraud, phishing. Those are the biggest forms of cyber attacks, number one cause of breaches. Just like you said, Abnormal is focused on understanding human behavior, you know, better than humans, so we can protect humans.
What I understand, Evan, is you got a really impressive annual revenue run rate, $200 million, right? Why is it such a vacuum for you to jump into? It seems like we've been talking about the AI story for a few years, let's say 2 or 3 years. And now everyone's like, okay, I need to think about the threat before me. Why not do it earlier?
Yeah, I think there's two reasons. One is that with the rise of these new technologies, it's very easy and accessible for criminals to, supercharge their attacks. We've seen this rise of social engineering and phishing over the last couple of years. As I mentioned a minute ago, they're still the number one cybercrime. But now any petty criminal can use ChatGPT. They can send emails in perfect English with perfect grammar, with context about their victims. And these new technologies allow criminals to personalize at scale. And that is very hard to defend against. The reason it's really hard is that conventional cybersecurity is focused on threat intelligence, kind of studying all the known bad attacks, blocking the existing attacks. And so this is why it requires a new technology that's not focused on known bad, but instead really good at understanding known good, understanding human behavior, and then looking for those anomalies and abnormalities as the basis for threat detection.
Can you explain a little bit of the underlying technology of how you're working that? So what are you applying? And ultimately, why does raising more money help you beef that up?
Yeah, so at the core, we're really an artificial intelligence company that builds cybersecurity products. And the core technology is focused on really understanding human behavior by integrating in all kind of enterprise technology systems. We understand the baseline activity, who talks to who about what types of things, what business processes. We can map out the supply chain, all using artificial intelligence. We then take that behavioral baseline and look for anomalies. And so that's very effective at stopping these personalized social engineering phishing attacks that have never been seen before. And so it's a kind of a really new paradigm for how to do cybersecurity. And then I think that the final reason is that conventional cybersecurity is very reliant on kind of a human-powered paradigm, right? Lots of human analysts analyzing lots of data. Obviously, machine learning and AI is far superior, faster, and more effective at doing that. And so AI allows us to make superhuman judgments faster than conventional security operations. So not only is it a bigger need in the market, but new tools allow organizations like us to become way an order of magnitude more effective at stopping these cyber attacks.
So to become ever more effective, do you need more people, more talent, or do you need more compute, more money for that?
It's a bit of everything, right? We just raised this big round, as you mentioned. There's really kind of three ways we're planning on doing, planning on growing the business. One is just, growing into new markets. We're very US-based focused. We're expanding internationally in Asia and Europe. The second is we do need to grow our team. We want to go get the world's best, leaders in technology and beyond. And the third is, making more investments in that core AI platform. And then using that to build, expand our product base beyond, email security, which we're known for, to protect other surface areas across the organization.
Evan Reiser, great to have some time with you. Abnormal Security CEO. Ed, what have you got?
Okay, time for talking tech. First up, Uber's hired former Tesla exec Rebecca Tanucci to oversee a shift to EVs. According to an announcement obtained by Bloomberg, Tanucci will start in September 16th as the global head of sustainability as Uber transitions to a zero-emissions platform by 2040. Plus, a senior leader at Rivian leaves for Stellantis. According to a message sent to employees, Rivian Vice President Tim Fallon will leave the company to become head of manufacturing at Stellantis, effective September 2nd. Fallon's departure adds to more than half a dozen high-level leaders that left the company in recent months. And finally, shares of Ola Electric surged nearly 82% in less than 2 weeks since its IPO. Rapid rise now bringing the scooters makers' market cap to more than $7 billion. We'll be right back. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Quick check on the sentiment of these markets right now, Ed, because we are coming off of what had been a slightly stronger rally prior to the jobs revisions data that we eventually got. More than 800,000 jobs, fewer than we had previously been seeing. Yes, we knew that revisions were to come, but this is being seen as a soft data point. The Federal Reserve, therefore, probably can still cut into this. I'm looking at crypto as our sentiment gauge, and we're up 0.4%, but we're down off our highs. Some interesting stories also around a pretty crowded trade in derivatives, basically showing that maybe we're could get a short squeeze if we got any more volatility in this market as people do go short the asset. Let's move on to some of the individual movers on the stocks perspective. Microchip Technology, individual mover here on the back of a cyber attack. The microchip company, which basically supplies the US defense industry, saying they were hit, their servers were hit by a cyber attack. Citi saying, look, this is only going to be temporary in nature, actually up more than 2%. Intuitive Machines, This was up more than 40% yesterday. Remember the rover that they've been sending to the moon? This space-based company is currently down just as we perhaps see a bit of profit taking. I'm looking at DD Global as well, just up 2.5% at the moment. Well, they come out and finally turn a profit. It's small, $196 million, but better as revenue climbs more than 4%, Ed. But we got more on China.
Yeah, as we said, tech stocks slumped after Walmart sold its stake in JD.com. Also, some key tech players in China have posted poor earnings of late. Let's get the details with Bloomberg's Isabel Lee. And it was interesting when the Bloomberg reporting hit on the Walmart JD stake, because actually ripples were felt very quickly across Chinese or at least Hong Kong listed equity markets for China tech. Good morning. What did you see?
We have shares of JD.com slumping, and it's not a surprise because this is an 8-year partnership between Walmart and JD.com. And when Walmart sold its roughly $3.6 billion stake, that's at an 11% discount, so it seems to be paying diminishing returns. This began in 2016 when we have JD.com taking over one of Walmart's online marketplace. So this focused on selling groceries to higher-end shoppers, mostly female, in major Chinese cities. And Citigroup said this was a surprise. We have Bloomberg Intelligence saying that even if they renew this 8-year non-compete contract that is existing right now, and it ends in 2024, the terms for JD.com may not be as favorable. And Jeffries also said that you see the drop in JD.com mainly because of the unexpected of it all. And to your point, it's really been a tough year, or few years, for China tech because mostly all of them, I don't want to say all of them, most of them are really struggling.
And particularly when those are exposed to consumption in China. Vipshop, for example, rebounds today, but yesterday sunk hard on the back of its earnings.
Yes, exactly, because as a broader economy, China is still struggling. We have job prospects, especially for the youth, still uncertain. The property crisis, day in and day out, it's still there. And we also have just the economy. It's not doing well. And so this all affects consumer consumption. And we had a slew of earnings from Alibaba, JD.com, and even PDD. And I must note that last week, Alibaba, which is long seen as a barometer for Chinese health, it surprised investors when it said its main business, commerce, shrunk last quarter. So what does that tell you? And it really shows the divergence between what we see in the U.S. and what we see in China. And Walmart, in a statement, said that they want to focus on their own business and want to reallocate to other funds, likely the Sam's Club franchise they have, which is doing well in China. But Walmart did call the partnership with JD.com precious. So there's that. And it said it will continue to cooperate.
I mean, Isabel, you know me. I love a chart. I think that chart on your screen is one of the stories, at least for this sort of second quarter of this calendar year. Look at the NASDAQ and then look at Hang Seng Tech. Just go a bit deeper into the outperformance of US-listed technology shares and some of the struggles of China, or at least Hong Kong-listed tech.
We have the Chinese Golden Dragon Index down 12% year-to-date, down 14% in the past 12 months. And compare that with the NASDAQ and the S&P's double-digit gain this year, whether it's 17%, 20%. It's really a story of how U.S. technology companies are outperforming the rest of the world. And I think it's not even a China story where China is stuck in the doldrums, although that's one thing. It's just really how this is a U.S. story at the end of the day. Even Europe can't compete, even Asia. It's U.S. and the biggest companies in the world are in the U.S. Whether that rally will continue, as we know that the AI halo is fading sort of for a while now, but still, you cannot deny that U.S. is really the bright spot in the rest of the world, at least the tech companies.
Isabel Lee, great to have you on. We thank you. We're going to look at China in a different perspective right now, because we're looking at the release of China's biggest PC game to date, Black Myth Wukong. The game, backed by Tencent, remember, has become a bit of a sensation. More than 2 million players trying out the game in the first day alone in its global launch. It's according to StreamDB. It's a strong first-day performance, and of course, it could shore up expectations for China's $40 billion-plus gaming arena after years of regulatory scrutiny. Let's bring in Lisa Cosmos Hansen, CEO of Nico Partners, for more. You really understand and deep dive on the China element of gaming. What is the China consumer showing you when it comes to a desire to get into gaming? They don't seem to be reticent there.
Hi, yeah, the Chinese consumer has always been avid for gaming. They find that gaming is an inexpensive form of digital entertainment. It's very social. And the higher the quality of the games, the more these high demanding gamers will throw themselves into them and spend a lot of money. And Black Myth Wukong is just a perfect example of that. It's a perfect example of a lot of things, like Chinese game development prowess, how Chinese game developers are really world-class, and how a relatively unknown company like Game Science, which is the developer of Black Myth Wukong, backed by Tencent, backed by Hero Entertainment, how it could just have developed this game for years on end and then have it come out at the top of every chart.
Okay. Well, every chart, the other data set I was tracking was Sony PlayStation 5 sales on Alibaba for the 7 days through August 20th, and it was top of the consumer electronics tree, playable on PS5 and PC. What does that tell us about the Chinese game player right now, the Chinese consumer that loves video games, Lisa?
Well, it tells us that they are discerning. It tells us that they have money to spend when they want to spend it. And it tells us that they will spend that money on things that are high quality. So I think that for other game developers worldwide looking to tackle this market, there is opportunity there. Right now, Black Myth Wukong does have one of the coveted government-issued ISBN licenses permitting it to have domestic distribution, but its primary source of distribution in China today is Steam International. And for Steam International, the ISBN is not really relevant. So this is still a way for game companies to distribute games in China.
How, therefore, is a government going to assess what seems to be a phenomenal first day?
Well, I think the government will assess this as a victory for a Chinese-based developer, and one that is, going to certainly be a leader among the export pack of games that are being exported from China to the rest of the world. This is a single-player PC offline game, meaning it's a premium game. You pay for it up front, and there are no in-game purchases. So this is something really amazing, because most of the success of games in China has been for free-to-play or with in-app purchases, this type of thing. And most of the hits have been on mobile. This is a PC-based single-player game. And just to give you some point of reference, by the Nikos China Games and Streaming Tracker, one of the tools that we use to measure the market, it's our proprietary tool. We track streams on Douyu, Huya, and Bilibili, and there were 29 million viewers by Nikos' algorithmic approximation of viewers of this game out of 130 million viewers of all streamed games on those platforms. On August 20th. So that was really remarkable. Almost 25% of all gamers who are watching streams of games are watching this game.
Lisa, developed by Game Science in Hangzhou. I got so much marketing for this, particularly through the PS app. Do you think, just to extend Caroline's question, this is like going to be a national champion for China, that they'll say, what a success you've got here on our hands?
Yeah, sure. I think this is one of the big successes, not only of China, but of PC offline games kind of globally. And it happens to be from China. And it happens to be from a relatively unknown studio called Game Science. Similarly, Genshin Impact had been released by MiHoYo a couple years back, and it too blew doors past everyone's expectations and was a national, big hit that went global. And lots of people love the game Genshin Impact. So MiHoYo also came out with that game as their first big hit. And now we see Game Science doing the same thing. We've seen lots of Tencent games do this. We've seen lots of NetEase games do this. And speaking of NetEase, their big long-standing hit of 20 years is Fantasy Westward Journey. And Fantasy Westward Journey is a cultural, mythical, history-based game about, Journey to the West and Legend of the Monkey King. And that is the same theme that we see here in Black Myth Wukong. Okay. And this theme has been very popular among Chinese gamers forever. And now we see that, again, it doesn't get tired, that the gamers don't get tired of it. This is something that they love to play.
If I can find just a couple of hours this week, I will play. Lisa Cosmas Hansen, CEO of Nico Partners, thank you so much for coming back on Bloomberg Technology. Now, coming up, Barack Obama showed up at the DNC last night. We'll be live from Chicago. That conversation's next. This is Bloomberg Technology. Barack and Michelle Obama made their appearance on the second night of the Democratic National Convention, blasting Republican nominee Donald Trump while painting Vice President Kamala Harris as the heir of their historic political legacy. I want to bring in Bloomberg's Katie Lyons for more. And no matter which social media platform you looked on, the clips were shared. A lot of people had a lot of comments. Is there any summary of what was said on stage?
Well, we have to keep in mind here, Ed, that the Obamas, both of them, are some of the most popular figures in modern Democratic politics. Their approval rating among those in the Democratic Party is north of 90%. Michelle Obama, in particular, is kind of more so even a cultural figure than she was a former First Lady, given the resonance of her book that published a few years ago and the tour that came along with thousands of people. She certainly has an ability to kind of resonate with the American populace, and of course, is a hometown girl in Chicago. Her speech was very much one that seemed targeted at getting people to actually turn out to vote. Both she and her husband, the former president, Barack Obama, kind of warned about these ideas of complacency, essentially saying that this is going to be a tough fight. Michelle Obama calling on voters to do something, while Barack Obama, for his part, talked more about his relationship with Joe Biden. Of course, as Biden kind of gave his farewell address on night one of the convention, that went acknowledged. And Biden also, Obama rather, had some pretty sharp attacks for Donald Trump, talking about what he dubbed his weird obsession with crowd size, talking about how he's been whining for years and that it's getting stale for American voters. So certainly it was fiery. And of course, the Obamas have had this kind of social media power that we have seen. They really were the first kind of internet campaign, if you will, back in 2008. And so some of these resonating moments on social media we've certainly seen playing out, and keeping in mind as well that in that convention hall, there are hundreds of social media influencers, some of which have gotten actual speaking slots at this convention.
Katie Lyons, with a slight tech nuance on what was a big night for the DNC. Now, let's discuss the impact of the election on the tech landscape, on venture capital in particular. Marlon Nichols is with us, Managing General Partner at Mac Venture Capital, one of the signatories of VCs for Kamala. And, I mean, just quickly to start us off, with the DNC and the energy there at the moment, what are you seeing? How is it, are you hearing anything from a policy perspective that speaks to your industry?
Yeah, I think there's still a lot to be said and disclosed on the actual policy. But my perspective is Kamala is from the Bay Area. She was the AG of California. She knows tech. She's been an advocate and a supporter of tech for a long time. And I don't expect that to change anytime soon.
Marlon, a lot's been made of the idea that Kamala Harris is from the Bay. We also had a lot of people on this show that say, well, J.D. Vance was a venture capitalist. You know, he has the experience of backing entrepreneurs, therefore might be better for a startup leader or for an entrepreneurial environment. How would you respond to that?
I'll say this election to me it's about more than just what's going to happen for tech. I think tech is going to be okay, right? This election to me is about human rights and freedom and unifying the country, and I feel like Kamala is a better choice in that respect. I also think she's the most qualified candidate running, right? I mentioned she's an AG, she was part of the Senate, and she's been vice president in an administration that had to do a lot of turnaround from a lot of harm that was done from the administration prior. So that's why I'm supportive of Kamala and why I was a signer of the petition.
That human rights element speaks a lot to ultimately what the work you've been doing within Mac Venture Capital, because you are backing founders from diverse backgrounds. You are doing the work to not only be a majority Black-led team, but also then put your money to work there too. What sort of outsized performance do you therefore get from that as you speak to you're putting your money and vote behind Kamala, not just because of what she looks like and how she identifies, but also the experience she has?
Yeah, I mean, for us, we've always tried to build a fund that was 100% meritocratic, right? And I think that's the way that the world should work, right? Despite your skin color, your gender, et cetera, if you are the most capable and you're building the thing that matters the most for the majority of the world, then you should get the funding. You should have the opportunity to build that company. And that's the philosophy that we've employed at Mac from the beginning, and it served us pretty well.
Marlon, I want to just ask how things are going at the firm. To 2022, you had your sophomore fund, double your inaugural fund. You've had 2 years to invest. Go and see what's out there. How's that gone?
Yeah, I mean, I put our track record up against any other fund. We're investing out of our third fund now. All in, we're managing just around 600 million, which I think makes us the largest seed stage fund in Los Angeles and one of the largest in the country. I think things are going pretty well.
Let's talk a little bit about being in LA and therefore some of the areas that you've been allocating. First comes to mind is the entertainment space and the like, but I'm sure that you've also been looking at artificial intelligence. What are valuations like when you're taking those two separate areas and industry groups?
Yeah, you know what? Fortunately, at the seed stage, valuations haven't jumped or declined too much. It's been pretty steady. The range is roughly 10 million post money to about 25, and it's stayed pretty flat there, even if it's a AI company. So we hadn't we weren't really too affected by the major jumps in valuation that you're seeing at Series A and beyond. AI is a hot area for everyone right now. And obviously we're investing there. We've been investing in that area for over 10 years now, or I have over 10 years now, the fund, since our inception. Markets, rise and fall, and we just try to be steady.
Marlon Nichols, Managing General Partner at Mac Venture Capital. Great to have you here on Bloomberg Technology. Thank you. Now, coming up, SiriusXM signs a multi-year deal for the Call Her Daddy podcast. Interesting conversation coming up. This is Bloomberg Technology.
About SiriusXM after it signed a multi-year deal for Alex Cooper's Call Her Daddy podcast and network of shows. Now, it will give the satellite radio company the exclusive rights to sell ads on the audio, on the video, as you see here, versions of her show, as well as bonus content and events, and not only her show, but those of other contributors to the Unwell Network, like Alex Earl as well. Ashley Carmen joins us for more. For a few in our audience, they'll be like, who's Alex Cooper? Who's Alex Earl? What are we talking about here? This is a really Gen Z demographic, but it means she's got one of, the 7th most listened to podcast
in the U.S., yes, this first quarter. She's had a huge show. Call Her Daddy's been around for years. She had an exclusive deal with Spotify that had been going on for the past 4 years, I believe. And recently, she took some of the money she made in Spotify and started her own network with a lot of TikTok, YouTube stars. So again, that young demographic.
What I'm fascinated about in the world of podcasts and podcasters, if we use Call Her Daddy as the example, is who are the power brokers that get the deals done? Like, how does something like this come together?
Yeah, that's a great question. Well, Alex Cooper's agent is Oren Rosenbaum from UTA. He is definitely one of the power brokers in podcasting. He has signed deals for Alex Cooper, Ashley Flowers of Crime Junkie, also with SiriusXM, and many, many other podcasters like Guy Raz of How I Built This, so many others who work with UTA. And of course, all the agencies have podcast agents as well.
What's wild is that, here's a one-year performance of SiriusXM. It's down 24%, but yesterday it added basically more than $800 million in market capitalization through this one deal. Sirius has been aggressive. It also got into Smartless, another $100 million amount written. Is this the new price tag for a successful podcast?
It was really the way the business was operating actually like 4 years ago when Spotify got into the space. But recently, we haven't seen as many of these splashy deals. SiriusXM is really the one out there that's being aggressive, paying these big bills and focusing on the star talent, because I think they really see an opportunity where Howard Stern's contract is coming up. They're losing subscribers. They really need to bring in a younger demographic. And I think the way they see that they're able to do that is through these younger podcast stars.
So these are high profile, very quickly, Ashley, examples of leaving Spotify. Is that a worry, an exodus?
So yeah, some of these folks have left Spotify. Spotify has really just changed its operating mission. I mean, they were very, very, very aggressive in the podcast space, but since then, they've now really focused on efficiency and being profitable and having a better margin. And so we've seen their business actually do very well as they've backed away from some of these high-profile podcast deals.
Bloomberg's Ashley Carmen, terrific reporting as always. Thank you.
Some big deals to finish off this edition of Bloomberg Technology, Ed.
Don't forget, recap on the podcast. You can find it on the Bloomberg Terminal, as well as on Apple, Spotify, and iHeart. That does it. This is Bloomberg Technology.